Hi everyone, this is Thomas, CEO and co-founder of Franc. I thought I'd give you the highlights of our new content update, which is really trying to unpack what the hell is going on in the moment in the world with regards to GameStop. You may have heard around how there was a short squeeze and some investors lost billions of dollars, so I thought it'd be worthwhile just unpacking what exactly is going on. So the first thing to understand is, what is short selling? Now, when most people think about share trading, you think of sort of buying low and selling high. Now, short selling is actually when you do that in reverse. So you sell first, you sell high, and then you buy low. And as a result, you can profit off the difference between those two. So now what's really interesting with short selling is that actually you don't need a lot of money, because what you do first is you go to the market and you borrow shares, and typically the price of that is around 0.3% of the share value per year. So now you borrow, say, 1,000 shares, and you sell them on the market with the hope that the share price is going to drop. And if the share price does drop, then you can go and buy back those 1,000 shares at a lower price and give back the shares to the lender and pocket the difference. Now what happened, and this is where kind of the Reddit group Wall Street Bets come in, is they saw that a lot of GameStop shares were actually being held short. There were a lot of short sellers who were doing this. So they managed to get enough individual investors together to buy GameStop shares. So obviously that increased the demand on the share. And what happens when you increase the demand on anything, typically the price goes up. So now the short sellers were in a really tough situation, because as the share price goes up, they have an obligation to return the shares that they borrowed to the lenders. And there's anxiety, right? As the share price continues to go up, that means you actually have to realize a loss, because effectively you've sold low and now you need to buy high. So it means the difference between the two is going to be a loss to yourself. Some people try to ride it out. So Melvin Capital, some of you may have heard, had to borrow $2.75 billion just to stay in the game, so they didn't have to close out their position. The reality is, GameStop stock price jumped up 2,500% at one point in time, which is unheard of. Obviously, there are some people who made a lot of money. The reality is that, the GameStop share price is likely to drop. GameStop is a company that sells video games through a chain of stores, in many ways like Blockbuster, and like Blockbuster are likely to suffer the same fate. People want convenience. They don't want to leave their couch. They're just going to download the games that they need off the internet. So it's inevitable, I think, that GameStop share price is going to drop. But at the moment, it means that there are a lot of short sellers who have lost billions of dollars, and there are a few individual investors who have capitalized on the way up, but also a few individual investors who have lost money on the way down. At the top, GameStop was $480 per share, and now it's back down to $90. So it really is a point to note, that trading and speculating is a tricky game. Trying to time the market, whether you are buying low and selling high, or trying to, in this case, sell high and buy low, there's no guarantee that you're going to make money. Anyway, I hope you enjoy the rest of the content that we've produced this week to really unpack this sort of situation, and we'll bring you another update in a week's time.